In the FIG business, which is a core business within the corporate investment bank, we had a very good second quarter 2017, in particular in the credit trading. Secondly, yes, we went through a transformation in the second quarter. So you see the one or the other adjustments we have done. And therefore, we did it in one quarter. Now we build up the capital, we bring it back to the business. And with the processes we have, with the client franchise we have, I'm very confident that we will see actually growing revenues in that business going forward.
You say in the press release that you remain confident about maintaining your position as the fourth largest house globally in FIG trading by revenues. What gives you that confidence?
The client feedback we get. I mean, since I have been in this position, I have seen more than 150 clients globally. Honestly, they want to have an alternative to the US banks. They see us as the European bank offering the full range of corporate investment banking services. This client feedback gives me the confidence. Secondly, the expertise and the products we have. And then also, if you look into the underlying business, into the developments which I've seen over the last months, plus the capital position we have, I'm confident that we can grow.
What about the private commercial bank? And I assume this one is close to your heart because of your experience in retail banking. Why do we see revenues here dropping 10%, even with Sal Oppenheim included?
If you take out the one-offs from last year compared to this one, actually we have a flat development. And that in an interest rate environment which we have here in Europe, again, in an environment where in the second quarter we completed the largest merger of banks in Germany since the European Central Bank is in place in 2014. That is actually a good result. We have shown resiliency also there, despite the focus on the merger which we have done there. And hence, I think we are growing in the lending business. We are growing the assets under management. And that speaks for that, which is my ultimate goal. A business and a bank with more stable revenues, which is sustainable, profitable, and therefore we need long-term growth from the private and commercial bank. And that direction I can see with growing lending and with growing assets under management.
Let's talk about the rates environment. We seem to have a pretty clear path now from Mario Draghi and from the ECB. How confident are you that we can see rates increase, and how important is this to your business?
You know, this management in particular focus now on the next 18 months. We have set ourselves clear goals for the next 18 months for 2018 and for 2019. We are saying that we want to have a return on equity of 4% at the end of 2019, and that does not depend on a rates increase. Hence, we have to plan that what we can actually really influence. That is cost, that is capital, and that's what we are doing. Of course, it would be nice to have a rates increase. However, that is not in my hands, and hence this is not an underlying driver for the next 18 months. And to be honest, it's always hard to predict rates increases, and therefore this is not part of the plan over the next 18 months.